how would you invest in real estate if you're starting out right now, like today, in the current environment with all of the recession fears and the high interest rates and all the wars going on? Like, what would you do? That is the question for our special guest, my better half, Chris Lemire.
So, if I were investing today, starting from scratch, with all of the chaos going on right now, in real estate specifically, do I have a budget? Or just...
Let's say that you had paid off all of your high interest debt. So any credit card loans, student loans above 7% interest rate, you've already paid that off.
Okay.
And you have $50,000 saved up. And you're just moving out of your parents' house.
I remember these days. Okay, so I've got 50 grand. All my high interest debt's paid off. My living expenses as I moved out was about $2,000 a month, so about 24 grand a year. I'm a pretty risk averse person, so I would probably set aside the 24 grand into my safety net from scratch, which basically cuts half of my investable capital in half.
Okay, so you're saying your first step is to look at your expenses.
Oh yeah, figure out what my living expenses are, like my bare needs, not all the wants, not the lavish, not the going out, but like rent, food, all the transportation, like the necessity kind of stuff.
Okay.
And whatever that monthly rate is, I'm a kind of risk averse person, so I would like to have a year of that in the bank to let me sleep well at night and make decisions that are less panicked decisions, more like oh, I lost my job. At least I've got a year to figure it out. Like that kind of feel to it.
Okay. So you're setting aside, of the $50,000 you have, you're setting aside $24,000 because that pays for 12
rent
months
and food
of your necessary expenses.
Yes. So rent, food, transportation to get me back and forth to work. The necessities.
Right. And I love that, right? We talk about this a lot in the channel, but it's because that gives you so much peace of mind. And our most important resource, yes, it's our time. Yes, it's our time, attention, and like our brain space, right? Like our ability to think and reason and solve problems. And if we're like always freaked out because we're like so tight on our budget.
Like think about it. Think about a time when you were stressed out of your mind, like something really bad was happening. Were your decisions great at that moment? Probably not. At least they weren't for me. Maybe you're amazing and all of your decisions are always awesome. But when I'm stressed out, my decisions get worse. So yes, I would first invest in my peace of mind so that I can make decisions without worry that I won't get to eat. Especially if I had a family or something like that. Like being able to know that my bases are covered ahead of time is outrageously beneficial. Yes, inflation. Yes, it's getting eaten by inflation, but it will pay for itself in opportunity cost from that ability to make better decisions will outweigh inflation all day long.
Okay, I love that. Now we have the rest of the $26,000 left.
Yep. So that does limit my budget. I would probably, again, depending on where you live, this might be an option or not, but where I grew up, Gainesville, Florida, you could buy a house for 250 grand or less. With the first-time homeowner loans, I probably wouldn't go to rent a house. I'd probably actually try to buy one and see if I can get one that with either the 0 to 5% down, like the conventional first-time home buyer loans.
And to your point there, so there's a lot, some people don't know this, but there's a lot of 0 to 5% down payment loans to buy your primary residence, right? And if it's your first home or if you qualify for certain programs and grants, like 0% down is very doable. So definitely call your mortgage broker, ask your realtor for a mortgage broker referral, and they can tell you what kind of programs they have. Like there's actually a lot of those kind of programs where you can get into a house with 0 down and you might just have to pay the renovations and maybe some closing costs or things like that.
Yeah, especially like military. There's a lot of different groups that have their own kind of extra benefits set up. But even without any of those special conditions, the first-time homebuyer programs are usually very cheap as far as down payments go. Okay, so instead of renting a house, I'm going to be buying a house. And in my perfect world, I'd end up with like a duplex or something that I could rent out one and stay in the other. probably not going to happen in that budget. So this first one's probably going to be roommates. I just moved out from my parents' house, so that's all right. I haven't gotten married to this lovely lady yet, so we don't really need our own like space. So yeah, I would move into this new house, and again, I just moved out. I'm probably still in college, because that's when I moved out. But I'd rent out the other bedrooms in this particular house. So if I got a 2-bedroom house, I'd rent out one. If I had a 3-bedroom house, I'd rent out 2 bedrooms to other students, to offset that housing expense.
Yeah, and you might even make a little bit of money, right?
If I had 2 bedrooms, I'd probably certainly make money. If I had just 1 bedroom to rent, I might probably break even. But still, that's a huge expense off of me that allows me to accumulate faster and then reinvest in the next deal faster. But again,
yeah, because like, so that's a great thing that Chris pointed out, right? Because like he was talking earlier about that his expenses was going to be $2,000 a month, but now because he's doing this house hacking thing where he's renting out to roommates, he actually removed one of those expenses, right? The biggest expense you have is housing. So that's a really great tip and strategy for those people who are starting out and can do the house hacking thing.
Yep, and it also makes that safety net that I have set aside stretch even further. So now I probably have, once I've purchased this property, my safety net actually probably reaches out a little further than the 12 months, which gives me more peace of mind.
Okay. So this is really good. We probably only have time for like one more tip. Like what would you do past that, past buying your first property?
Yep. So again, rinse and repeat until you have enough cash to invest again. I think, again, with the market in the crazy situation it is, owning assets is the best thing possible. So trying to get into more assets as quickly as possible is always...
And by assets, what kind of assets?
Yep, so getting to that. When I say asset, I don't mean like Bitcoin or gold or something, equities and stocks. I don't mean like buying Tesla. What I mean is I like cash flow because cash flow pays for my expenses. So for me, an asset is something that puts cash in my pocket. I think Kiyosaki defined a asset that way, as something that adds money to you. So what I'm looking for is a cash flowing asset. For me specifically, I have a background in real estate, but anything that generates actual cash flow, spendable money that I can feed myself with. I can't eat a Bitcoin. It's not food. So if I could invest in real estate that generates cash that lets me eat, that's great. If you have other options that allow you to generate cash flow, that's what I mean by asset, a cash flow focused asset. So if the price goes up because the market decides to turn and we get a new bull market, great. If market tanks and the value of the property goes down, I'm still eating. That's what I mean by asset.
Okay, awesome. Well, those are really great tips, right? So let's summarize this thing you said. First is to figure out how much of a safety net you need, right? Yep. Calculate your basic living expenses, not like, fancy going out to dinner kind of stuff, but like what you need to survive expenses each month. And then Chris likes to have 12 months of those set aside as cash reserves or a safety net. So he said 6 months, 6 to 12 months, right? So that I agree, that's a pretty healthy safety net that gives you peace of mind. The most important thing, because again, you're starting out, right? So you're learning a lot of things.
And you will make mistakes, like for sure.
And there's a lot of problems. The reason we are able to make money in real estate investing, in business, is because there's problems to be solved. We actually buy problems and solve them. So you really, really need the peace of mind. Like seriously, if you're trying to solve problems and learn all this real estate investing thing and entrepreneurship and all of that kind of stuff, and you don't have peace of mind, like...
It's going to be rough.
Yeah, we've been there.
Yeah.
Don't do it. So first, safety net. Number 2, he talked about house hacking potentially. I think the main thing is just buying your own house first, right?
Yeah, so it floats with inflation, right? Again, in this incredibly inflationary market, owning the land, owning a building, if the inflation continues, the property value floats with it, so you don't get hurt as much.
Right, and remember, you can use 0 to 5% down payment loans. Some people are like so fixated on, I need to save 25% down, 25% down. Well, it might take you like 20 years to do that. And by the time, if inflation continues, like you might never buy a house, right? And your rent still keeps going up. So take advantage of the 0 to 5% down loans. We actually have a whole nother video about like why it's better to, not put a whole 25% down payment. So check that out somewhere up here and in the description below. And then the third thing you talked about was buy cash flowing assets, right? So it's that kind of focus on buy for cash flow, because especially right now in a recession, like the whole plan to buy and it's gonna like go to the moon,
Yeah.
probably not gonna work out. I mean, it might go to the moon at some point, but like we don't know how long the recession's gonna be.
And you can't eat for that period, right?
Right,
If it's
like you're
generating
gonna
cash, you can eat.
Right, you're gonna starve. You're gonna like be stressed out. You're gonna be like mad at your family
Or
for
forced
no
to
reason.
sell, or forced to sell at a low number, right? Because you have to eat.
Right, we actually have another video about that. Why it's sometimes better to have cash flowing assets. So yeah, watch that up here. But anyway, thank you, Chris. That was awesome. I'm sure a lot of our listeners learned a lot. If you guys are new to the channel, I'm Ariane, this is Chris. We retired with investment income at 27 and 28. We co-own over 2,400 rental properties with partner investors. We have a lot of free resources to help you reach financial freedom, so check that out in the description below. And I am on TikTok and Instagram. Check out my handle here and in the description below. Follow me there if you want daily investing tips. All right, guys, thank you so much for watching. We will see you next time.